Folks, welcome and thank you for joining us on the Ideas Project, a limited series by Smallcase. I'm your host Anupam Gupta, and today we are joined by Madhusudanan R. Madhu is the founder of M2P Fintech. Madhu has been in banking for many years now and is at the forefront of this current wave of the fintech boom in India, making him the perfect person to talk about the oncoming disruption in the banking sector. What can we expect? What's causing this disruption? What could be the turning point for it all? So stay tuned. If you believe in the future of private banking or of the banking space, do check out the Banking Tracker and Banking Privately Small Cases, which are portfolios of banking, private bank, and NBFC stocks that you can track and invest in with your favorite brokerage account. Links in the episode description and in the show notes. Hey Madhu, thanks for doing this. Welcome to the show.
Hi Anupam, great to be here.
Yeah.
Looking forward to a conversation.
Right. Let's get started, Madhu. I mean, what do you think is or has been the most disruptive thing in fintech right now? Something, that you feel is going to change the sector as a whole going forward?
I think, if I just have to talk specifically on India, we define what India fintech is going through as, seeing the second order effects of what fintech can do, right? And the reason why it's important is because in most other markets, including the West, they have foundational challenges which fintechs are addressing. So in the US, if you send money, it doesn't reach for 2 days, right? Like, when was the last time you experienced that in India, right? So the foundational challenges are still very heavy duty in the US and most parts of Western markets. Therefore, fintechs are solving for that. And the value extraction story is very different because they are really going after the bank. But in India, if you look at, you don't really worry about most of the aspects that affect you as a regular bank customer is actually solved for, right? Like payments, you can't make it any efficient than what UPI is doing, right? There's no arbitrage on time, money, or speed. So therefore, innovators and founders who are working on fintech ideas, we really have to solve for more I can do, which naturally means that you and I as customers are going to get better products, better experiences, or maybe more cost-effective product, right? And that's where the excitement is, because technology is this great leveler. If you just take from another industry, you would have noticed just with the just concluded IPL, everybody, right? You and me were watching IPL when you are taking Uber. When the driver has parked his car, he's also watching the same game, right? Therefore, it kind of accelerates adoption of tech-enabled products, and that's what technology does. And moment you have innovators coming in and doing that, inclusion is going to happen significantly. That's the excitement as far as I'm concerned.
Yeah. If you look at the past, if you look at how disruption has already affected banks, and if that gives you any hint of what lies in the future, I mean, let's talk about the past, for example. How has disruption really affected the banks in India till date?
Yeah, I think the nature of these partnerships are also evolving, right? I think it's more to do with the maturity and just kind of clinging on to the earlier point. 10 years ago, if you actually looked at fintech, and some of those businesses have just gone public, right? Like someone like a Paisa Bazaar, I'm just using as an example. They were a distribution partnership. They were probably the first fintech, right? It had taken them 10 years to mature and go public as a company. But today, those partnerships have evolved where from a distribution, you're actually started doing more and more of core, banking functions, right? There could be somebody providing a data product, which will help the bank underwrite the customer better, or risk products where, somebody who's defaulting in multiple banks on the fly, can you get to know so that you're able to underwrite that better. So there is more and more adoption of tech that's happening, which naturally means that the products are getting better at bank. And it is unlike in other parts of the world, it is actually co-opt and co-live and coexist than compete. That's the way India is actually evolving, and it's charting a new path. Actually, the world will adopt the India model, in some time in the future.
Yeah. When I look at banks, what does this entire process of unbundling look like? And are the incumbents also following the same strategy?
Yeah, so I think the incumbents in some way will be forced to, adopt some of this, right? There are two or three external factors that can drive it, right? Like we had one event in, demonetization where the government started mandating that, you need to onboard so many merchants. So there are macro factors that drive some of this adoption, where even if you're a old school private or a public sector bank, you're forced into adopting some of this. It comes as top down. or there is customer adoption that is driving it, right? Like exactly the same UPI example. A few years ago, we always had challenges. We didn't really worry whether you had an account with State Bank of India or an ICICI Bank or any other bank. If you're on Google Pay, you can link up your account and use it. So all banks had to move to a certain common sort of standard, right? So there is some bit of market pressure that is playing out. You may say that some banks could say, I don't want to participate in a particular business, but you have to ring fence and protect. I mean, everyone has that mandate to ring fence and protect their business. So therefore, that is where I think the envelope is getting pushed in terms of saying, can we keep raising the bar, or what that minimum should be, so that everybody kind of benefits from that.
This digital expansion versus branch coverage, so the advantages of going digital versus increasing the branch coverage, what do you think are the considerations that need to be taken into account?
I think this whole, in my mind, it's overdone. In terms of saying, you don't wake up thinking every day, "Acha, मैं आज एक account खोल देता हूँ," right? Like that's not how consumers think about it, right? And if things are going well, you don't really want to upset that apple cart, right? Because there are so many other things tied in. You might have a standing instruction, you might have a home loan running on it. So nobody is thinking about saying, how do I change this radically, right? But at the same time, if you have to keep pace with how things are evolving, how many of the new customers are coming into the bandwagon, right? So going back to the same example, that Uber driver 3 years ago may not have had a bank account, right? Because Uber settlements had to go into a bank account, he adopted a bank account. Now RBI recently came out with a guideline that said banks can open digital banking units as a separate business unit within the bank. So you have retail bank, you have a corporate bank. Every bank that's the structure. Now we are also going to have something called as a digital banking unit, right? Whether that comes out as a separate business unit, some of the private banks have already done this, right? Like a Kotak has a separate charter on 811, right? Separate team, separate product. Bunch of banks have done that, right? Now there is a regulatory framework to say, if you have to drive this, how do I drive this? Then it boils down to, are there new people coming into the sort of ecosystem who could be serviced differently from how it was done earlier? So how do you move away and carry a lot of the people digitally so that you're able to serve more customers at the same sort of cost? And a lot of the branch expansion did not happen because once you become below a certain economic strata, the cost of operating a branch never sort of added up, right? So it was always a balancing act that banks used to do, where every branch I need to have X number of customers at Y balance sheet for it to be profitable. So when you do that digitally, that cost equation kind of goes out of the window, and you are able to service more customers. And that's the excitement around digital bank itself.
Do you think that there'll come a time where a fintech can actually become a full-blown bank, and why isn't it happened yet? Is it because of RBI regulations or what?
Yeah, license generally India has been conservative in the way we have given out licenses, right? Like historically, other than the SFBs and payment banks, if you look at full-flown licenses, very few and far in between have been sort of given out for whatever sort of right reasons or wrong reasons. But I think we are primed for some of these fintechs evolving into almost like a digital bank. Today, they are only a skin on top of an existing bank, because that's the regulatory charter. But I think the market forces and the execution will allow some rethinking to happen. And also regulators generally sort of will learn from other regulators, right? If some other market, some things have worked and what's the mandate that the regulator carries, right? They have to ensure that the fund custodianship is done well. They have to ensure banking access and inclusion is driven, right? So if technology is going to do that, if there are proof points to say, yes, by giving out these licenses, there is going to be more access that is going to get enabled, I think they will be open for it. There is already some noise around it from a policy circle standpoint, but they don't operate with that. It's not a quarter on quarter sort of appraisal, right? It's not like though quarter may, I think maybe it comes in a 5-year window. I think the hope for a number of neobanks also is that at a certain scale, and when the licensing happen, there is maturity in that market from a regulatory standpoint, they would be able to go out and seek that licenses because they would have kind of created that customer base.
Yeah, let's talk about a hot topic now, which is basically customer experience. If that's the leading reason for disruption in the first place, right?
Or the lack of it.
Yeah, that's what I'm talking about, right? Because customer experience with traditional banking, my God.
Yeah.
So, is that the need for disruption? And what are the services that we even still in this day and age, in 2022, when UPI is where it is and digital payments are where they are in India, what are the things that we still need to go to the bank for? And, can that be disrupted going forward?
Yeah, I think practically most of a retail customer's needs are kind of met, right? Like if you're a salaried person, you virtually don't have a need to go to a bank. I mean, I used to work for Citi in 2009. I converted my payroll account into a regular account. I have not visited that bank branch after that, like in 13 years, right? So
Wow.
most people, that's the case. But you might have some other aspects for which you may have to visit the branch. That's where technology can play a role, right? Where it can start disrupting. But the challenge is that, and I had a sort of Twitter banter with somebody who had posted saying some bank had made a announcement on their quarterly results. They said you should focus on making your app better, and we said, the bank is focusing on what their mandate is, which is building the balance sheet, making more money. They're delivering shareholder value. But the reality is that there's an entire world that lives outside the Twitter sort of ecosystem, right?
Yeah.
So therefore the broader purpose from enabling banking access is kind of moving in the right direction. Of course the apps are crappy, and they have to sort of get better, right? But I think that is where a lot of the pushing the envelope will come from fintechs as well, right? So if you don't upgrade, you're going to lose that customer. That fear is real in most CDOs when we talk to, right? So they realize that they have to upgrade. They realize that this is a need, and they all are on social media. They just don't, they duck, they don't say that they work for X bank or Y bank, but they all read all kinds of customer sort of interactions and responses.
Yeah. Let's talk about neobanks, Madhu. Where do they fit in the current banking system, right? Where does, for example, M2P Fintech come into the picture, and how is M2P Fintech involved in changing how India thinks about banking?
The whole neobanks in the West is very different. They all have licenses. Some of them have licenses, and they can build out like competing with regular banks. In India, currently the framework of regulation is only a layer on top of an existing bank. So you could have a partnership with a bank as a neobank, but offer superior experiences, offer great promotional campaign, run promotional campaigns, give customer personalized sort of services. Like for example, can private banking, which is only for the elite, first top 1%, can technology enable you to offer that to the masses, right? So that they can have better saving and investment products available. So I think the experience layer and how financial products can get integrated today, when you walk into a branch, you are actually have a mental sort of model that they're going to sell you an insurance or a mutual fund, right? So that's what they do, right? They realize fee income by cross-selling, upselling products that there are like 50 products that a bank branch might have. But when it comes to mobile, you can't have 50 inventory SKUs on the app, right? So you basically have to personalize it, and technology allows you to hyper personalize it also. There's a platform called Account Aggregator, which is just taking shape in India, which will allow you to link all your bank accounts into one user interface, right? Which means that when you open a bank account with Bank A, you can also say Bank B, C, and D. I want to pull in all those relationships and give me one unified view, right? It actually gives you a lot of information. You might not even know that you're spending X, spending Y, spending in these categories. So it allows you to budget. So different profile of customers, you can meet different needs by just using technology. I think that's where a lot of the focus will go into, and that's what neobanks are focusing on. And our role is to sort of be that enabler which will sit in the middle and orchestrate some of these new playbooks.
Yeah, sounds exciting. What do you think? If it does happen, what would a fintech powered bank look like?
So I mean, we are already in the middle of it, right? So everybody keeps saying Web3 and metaverse and all that, right? We are already in the middle of it in terms of that disruption happening. We don't notice it. Let's say you're ordering food on Swiggy. Swiggy can store money for you, right? So you can keep that balance in your Swiggy wallet. That's actually a piggy bank, right? So in some ways, without us realizing that we are having these financial products embedded into our journeys, over time, I believe that the whole banking and the payment, for example, will become invisible, right? So you don't have to do this OTP, and finally we'll have some solution to not receiving the OTP, where magic will start happening. Where when you're ordering food or ordering foods online, the technology will enable it to be powered, by itself, right? Ultimately, what are you establishing when you do a card number and OTP? Is that you are saying that I am who I am. Take the money from this, financial address, right? Can that financial address be delivered technologically differently, right? Can it just link up your mobile and some other ID, your device fingerprinting along with your biometrics? Can the same experience be rendered? Technology has a solve for it. Now it needs broader adoption for everybody to start using it, right? That's where it will get exciting, and that's where the market is moving.
Yeah. So from an investor's or a shareholder perspective, like you said, given where the market is moving, what should one or how should one evaluate banks, with neobanks coming into the fray?
For now, I think neobanks are not posing any serious threat from a bank partnership standpoint. Obviously, some of that fee income will have to be shared with them. They are providing experience. But if you look at the partnerships that banks have with neobanks today, most of those banks had actually missed out from a large branch, expansion playbook, right? It could be, I won't say a very small bank, but a mid-sized private bank which is partnering with a fintech. So for them, it's net addition, right? So they were not making that revenue. It's a additional line of revenue through a new channel of distribution that has got enabled, right? So from a banker's lens, for minimal or no capital expenditure or operating expense, I'm able to cream more customers and therefore more fee income revenue and potentially future cross-sell opportunity. So that's what the neobanks are doing today. So therefore, the winners from a neobanking wave could be the tier 2 banks in the private space, which has the relevant technology and they have certain level of trust. Ultimately, for you to run a banking product, you need that bank name to also be slightly more familiar, right? So you can't run a small bank from, let's say, Punjab and go to Tamil Nadu and try and say that you are a bank, right? So people will think that you're scamming them, right? So there has to be a reasonably large trustable brand that should be associated with, and I believe that those partnerships will actually become very symbiotic and will lead to a lot of value creation for both the bank as well as the fintech partner.
If you were to do some crystal ball gazing, where things are currently, what are some aspects or some problems or some issues right now in the banking system or in the banking experience that we should keep an eye on? I'm saying that, if this problem or this process, if it's being solved and if it were to be properly solved, then it would change banking forever. Can you think of some areas or anything here?
India is a consumption credit market, right? So there is going to be more with growth. There is going to be new, sort of wave of people who are going to come into that emerging middle class segment. You're going to have more consumption spends that are going to happen, which naturally points to more credit, the need for more credit at that point of sale, right? So we are very, very poor, coverage or with respect to credit cards, for example, right? Or for that matter, generally unsecured lending businesses, we are really poor, right? Like, just to give you a comparison, US is like $7 or $8 trillion in payment volume on cards alone, right? Vis-a-vis India is about 200 to 50 billion, right? So we are not nowhere close to what potential scale it can get to. So therefore, there's a lot of action that's where if you see most of the fintechs are gravitating towards lending. It's not because there is money in it. That remains the most unsolved problem even today, right? So therefore, there is going to be value unlocking that's going to happen with maybe dozens of fintechs solving for credit in a differentiated manner. It's not just for people like you and me who are buying goods online. It is that supplier of that product, right? So how SMEs are getting financed, how a fleet operator is getting financed, right? In across all of these levels, if you sort of start peeling the onion, you'll find that fintechs are trying to disrupt how, but disruption does not necessarily mean somebody's lunch is taken away. It's actually market making as well, right? So therefore, you might have a new segment getting created on credit, which was completely non-existent, and suddenly somebody is trying to sort of capture and manage that opportunity. I think that's where the India sort of story will sort of lie as far as fintech is concerned.
Yeah, so you spoke about credit, you spoke about loans, you spoke about especially consumer credit. There are enough trends that point towards almost every company or every startup becoming a FinServe company offering FinServe. What do you think about that?
See, the thing is, there are two kind of ways to look at it, right? One is whenever you do financial services, there is an inherent trust that gets built in. So the brand affinity actually sort of grows, right? People will start trusting that more brand. When you're trusting somebody with your money, likely that you're trusting that person or the brand even more than any a brand that is not doing it. So that's one aspect. So reason why airlines do co-brand is that it drives loyalty, right? So without you realizing, you're actually buying into a ticket for your free holiday, right? So that's the premise with which why airlines do co-brand, right? Co-branded credit cards. So that trust is an important element as far as companies are concerned. And once you extend that, the economic model in a lot of these products are fairly well oiled, right? Like if you're lending, you can have 200 basis points of return on the asset. So from a use case standpoint, if somebody is growing For them to raise capital, they can say that this as a line of business is going to grow. I need so much capital to do it. And it's a flywheel, right? So once I start lending, a customer will come back for 5 other things, 6 other things. So the flywheel and the glue to keep that customer going is where the financial services products actually, stand to gain, right? And that will continue to sort of happen. Therefore, more and more companies are coming in and sort of doing financial services.
Yeah, and last and final question, Madhu. Which banks and NBFCs do you admire? Do you think are actually best placed or well positioned to tackle the growing digital playground?
Yeah, that's kind of a, we work with most of the banks, so I don't want to, get into a trap on this. But
Yeah.
generally speaking, I think we have, as a market, we are, fairly well ahead in terms of how tech ready we are. I mean, to the extent that many of the banks are only 15 years old, right? Like the last set of licenses that came out for a Kotak or IS Bank was like 2002, 2003. They're relatively new. So from how the Western models are, which are like 50, 60-year-old banks and 100-year-old banks and all that, right? So tech, we are reasonably sort of new. There is still a lot of room to be covered with respect to experiences, the apps getting better and things like that. But most of the tier one banks are, right up there in terms of what product offering that they make, right? And you'll be surprised the amount of effort that the next tier of banks are putting into actually do that catch up, right? What happens is that some of these banks could be regionally strong, so therefore they're trying to sort of differentiate themselves by saying, can we become this local, think of it like IPL, right? So can we have a local, bank, IPL kind of team, is where, I think a lot of action is. Fundamentally, we are a business that, hopes and, prays that banks remain as inefficient as they are so that we have a business to run. But, I can say that difference is like vastly different from what it was, 4 or 5 years ago with respect to their readiness, their promptness to actually adopt technology and so on and so forth.
Yeah, so that's a wrap on this episode of the Ideas Project. Folks, hope you enjoyed this chat with Madhu and hope you get a better understanding of the banking sector as well as where the fintech bank relationship is headed. Madhu, thank you so much. Really, thank you so much for sharing
Thank you so
your
much.
insight with our listeners. That's a wrap.
Thank you. Thanks, Anupam.
We will come back with more insightful conversations to help you achieve a well rounded investment portfolio. Until then, bye bye and see you for a brand new episode of the Ideas Project.